And what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin and macro market update analysis video. I have Sean with me on the other side. Sean, say hello to everybody, please.
Good morning, good morning, good morning, good morning.
So today is an important day, guys. As many of you guys know, today is the FOMC meeting. It is going to be a rather decisive one, and that's why I got, master of Fed plumbing with me today,
What?
Sean Dexter. So yeah, Sean, I think, they have all been hearing my thoughts now for, days on end. And I think today is going to be a good day to have you on and for you to give them your thoughts on, what's about to happen with, the interest rates and what the Fed is about to say and what they could say and what could lead to the markets, what could lead the markets to either dump or pump. So, yeah, you ready?
I I don't think anyone knows. I don't think anyone knows. Um, yeah, like long story short, he should come out and just say 25 basis points, but um, he also needs to be soft in his Fed speak. So I think that's what everyone's going to be expecting. But it's Jay Powell, man. Like it, who knows? Who knows?
Yeah, so so what we're gonna do, we're not just gonna, jump the gun here. Let's go over this in a very systematic way. Now, guys, just to tell you what we're gonna be talking about today, of course, we're gonna be talking about this FOMC meeting that's coming up. We'll be going over the Fed funds rate. In addition to, I have some really cool data points that I want to show you because the two things that we're currently faced with right now, where's my mouse, is interest rate hikes. Okay, I'm just gonna draw an up arrow over here, a very ugly up arrow. So basically interest rates going up, as well as, liquidity in the market, right? There's QT and QE. So I wanna go over these two elements, okay, to see which ones have been the most important for, markets to rally. All right, we'll be going over some historic data, and perhaps Sean can give us his thoughts on, on these two elements that could possibly contribute to, the next bull run for Bitcoin. Is that cool, Sean? Are you good with
Mhm.
that? Are
Yep,
you good with
I'm
that
good with that.
agenda? Okay, cool. And then, of course, we'll be talking about price action. We'll primarily focus on the higher time frames, but I will also be going over the lower time frames because I did present a pattern play to you yesterday, so I'll be giving you guys an update on that. So let's get on over to my notepad. And this is it. So I think the most volatile thing after after Bitcoin's price action this month is, the target rate probabilities. Would you agree?
Yeah, hands down. It's been
So
crazy to watch. Just
yeah.
yesterday, we were sitting at around 25%, and now back to 14%.
Yeah. So now what's it? 85% of, the market right now thinks that the Fed is going to come out saying that they're going to increase interest rates by 25 basis points, right? And 14% now, so gone down significantly from last time. Only 14% of the market think he's not going to increase it at all, okay? So he's going to keep it flat. So people have been talking about this on the news channels. People have been talking about this on Twitter. I feel like irrespective of what happens and, say J Powell comes out today and if he increases it by 0, I feel like people would not know how to react. And if he increases it by 25 basis points, people will still not know how to react. I feel like there's a lot of uncertainty as to how to react to the change in interest rates, right?
Mhm.
Especially with the banking crisis backdrop.
Yeah, this again, and I don't blame them. I wouldn't know either. And the best way to react is really to wait for a couple of hours for the charts to settle themselves because there's going to be a bull and bear battle on the lower time frames, people playing volatility and emotions, and then decide based on what the charts are doing. Especially if he comes out with zero. Especially if he comes out with zero. I think 25 would be the best outcome for a action to be taken after the first few hours. I still don't think anyone should react on the first couple of hours at all. Just sit out, watch what happens. But honestly, in my opinion, best outcome would be him saying 25 and we're going to stop, we're going to pause and see what happens because
Mm.
financial conditions are already so tight now, right? I don't want that idea to be misconstrued with me trying to say that he should hike 25. By all means, I'm in the camp that he should pause over here, but he can't. He can't because of his rhetoric over the past month or so, right? Like the Fed is going to lose way too much credibility if he comes out and does that, and it may spook some people, right? Because at the moment, Kusha, you're seeing the probability for the 0 basis points hike drop down from almost 50% last week, right? You can see
Yeah.
it on that little table there. Actually,
Yeah.
last week we were
So it
sitting
started
at
off at
around.
30, right? Then it dropped
Actually,
to 26, and now at 14.
yeah. So I'm looking at the live data here. I think you have a screenshot from just like that's how volatile, by the way, things have been. Because your screenshot is from I think yesterday,
No,
right?
today. What? No, it changed?
Yeah, because I'm looking. It's for this refresh. You're going to see 45% a week ago, right? That's how because it's going to update to 15th of March. There you go. You see that?
Oh,
That's how volatile
snap.
the probabilities were last week, right? Because now the 1 week date is 15th of March, not 14th of March, right? So 45% just a week ago. And the next week it turned to 35%. So the probabilities have been dropping drastically because people have been less spooked, or rather, they're kind of beginning to calm down, right? Because things aren't continue to break. The contagion at the moment seems to be restricted, right? We don't know what's going to come, but as soon as he comes out and says zero, if he does zero, people are going to think, wait a minute, he thinks more banks could break. At the moment, people are beginning to think maybe that's it. Maybe we won't see any more banks failing. Maybe that's the extent to which we're going to see bank failures. However, if he comes out and says zero, there are two things that the markets are going to start speculating on. Maybe there are more banks that could fail, and two, hey, the Fed is losing all credibility whatsoever. Let's just do our own thing. So that's the kind of risk he faces for pausing at the moment, and that's going to be something that he's going to have to think of, regardless of whether he should be going zero or not.
I think it's going to take like one very decisive move in terms of price action to then get people to capitulate on either side. I started thinking about the various factors that actually lead to, well, the next bull run, right? If this is the cycle right here, looking at the various factors that lead to the next bull run, especially if you're looking at the backdrop of macroeconomics. So now, would you agree that the two most decisive sort of policies that could lend to the initiation of a bull market is number one, interest rates, and two, liquidity. So now we're going to focus on liquidity between the policy that's been sort of
Well, there's a third tool
in
as well
motion.
if you want
Okay,
to list it.
all right, let's go. What's
It's
the third one?
Fed speak, right? Just his forward guidance. So
Okay, I
again,
like
just say
that.
forward guidance would be a lot.
Let's speak.
Yeah. So if he says, okay, you know what, next month we're going to stop and we're going to start QE. He's not going to do that. He's not going to say we're going to start QE. But let's say he does that, right? That is a tool to initiate the bull market, because that's what you said. There are three tools, or rather, you said two tools to initiate a bull market. Well, you could initiate a bull market by making the market forward price the fact that you're going to start QE or you're going to decrease the rates, etc., etc.
Okay, so basically watch out for Fed speak today, because right now what I really want to drive in for, well, everybody watching is, what to really watch out for in terms of his tone. Now we know that, okay, fine, as far as the interest rates are concerned, I feel like people are still going to be they're going to be in indecision, right? Indecision mode. But what else to look out for? So Fed speak would be one thing to look out for, right? So basically you're saying stopping QT, or perhaps even what else? Basically, stopping interest rate hikes could also
Yeah.
lend to a
Pausing.
bullish stance for the market, a bullish tilt for the market.
Yep.
So I'm going to say stop rate hikes. Okay, RH. So now, as far as the liquidity is concerned, we're looking at these two tools that they have been using, within the entire cycle, which is either QT or QE, right? So there's QE/QT. Now we know that they have been dabbling in QT, which is quantitative tightening, where they were effectively taking out liquidity from the market. Now we're not going to get into the nuances of how they've been doing that. But there's been a development as far as the liquidity aspect is concerned, right? And that is because of the entire banking crisis that we had. They actually had some sort of emergency liquidity given to the banks, right? They had their discount windows being opened, and I believe they have another program that's giving banks additional liquidity. Now, I was just scrolling through Twitter. This is it. So now this is the discount window borrowing. Now I got this screenshot from Balaji. Now Balaji has been a very controversial player in the Twitter space recently because of the big bet he made. But this is the discount window, and I got this chart from his profile, and apparently $152.85 billion has been lent out just through the discount window. This is not even withstanding the other program that they have in terms of liquidity. So here's the
Oh,
number. Yeah.
so
So
this is
here's
152 on top of the 300.
yeah. So the thing is that we know that throughout this entire period of, say, this is the bear market right here, right? Bitcoin's bear market. Let's call this bear market. We know that it's not just interest rate hikes, interest rates that have been going up. So we know rates have been going up, but even QT, they've been dabbling in quantitative tightening where they were actually taking out liquidity from the market. But now what this move has done right here, now I'm not sure, I haven't really gone ahead and, verified the numbers, okay? This is just a cursory search that I've done, in that the liquidity that just got pushed out of the market basically has undone the quantitative tightening by 50%. So all of the, say, if you look at the amount of liquidity that was taken out of the market as being 100%, right? That has reduced now by 50% with just this move right here.
So essentially, liquidity is back in the markets, right?
Yeah.
They have been withdrawing liquidity over the past 1 year now, slowly, very slowly, but all of that got undone in like a
Yeah.
couple of weeks. So
Yeah.
not all of it, but like
But
at least 50% of it. And
exactly.
probably more to come. Probably more to come. Like we're going to see the Fed balance sheet. If we just look at the Fed data, guys, you're going to see the Fed balance sheet like take a massive spike to the upside again after slowly trickling down. It honestly looks like Bitcoin. Like, Bitcoin had a slow bleed over the past year or two, and now suddenly spiking up like it always does. And hey, Bitcoin sniffed out liquidity arriving in the market once again. And that's something I talked about when I was doing all the videos leading up to the bull rally, right? Into this bull run. I was talking about all these factors, and we brought up cross-border capital's liquidity chart where he talked about how, hey, liquidity is bottoming over here. And he uses TA too in a way, right? Because he's looking at the charts, he's looking at where the index bottoms, and he's like, hey, liquidity is likely to bottom here because that's where it usually does bottom. And now we're seeing a spike in liquidity show up in markets.
So now, if I had to ask you, I feel like you have a better sort of understanding of this, right? If I had to ask you, let's go back up to the three things that contribute to, market moves, right? We're looking at rates, liquidity, and Fed speak. How would you rate liquidity on that list? Like, how important do you think liquidity is?
It would be rank one. We definitely rank one because based on liquidity, rate hikes will affect you or not, right? You're kind of seeing that over here in this most recent crisis. The reason rate hikes caused the issue was because they ran out of liquidity, right? If they had the liquidity to sustain or to withstand the bank runs, right, the withdrawals, it wouldn't have been an issue. But they ran out of liquidity. So how is JPow solving the issue? Not by decreasing rate hikes, right? Not by selectively saying, hey, you guys over there, you bankers, I'm selectively going to choose you guys to have low rates while the rest of America can have high rates. No, he's not doing that. He's saying, hey, you guys over there, you guys get liquidity to deal with the rate hikes, right?
Yeah.
So yeah, liquidity number one.
So and I sort of like this sort of this is gonna be a good segue into something else that you brought up months ago. Now Sean has an excellent chart somewhere on his trading view that basically draws out every time the Fed has increased interest rates, and how
Oh, this
has the
was 2 years ago.
market. Yeah, so this was a very long time ago, but anyways, this is the chart right here. gonna
I
scroll
did
down
this
to
2 years
it.
ago with the community live, right before the bear market really started going full force. We planned, or rather went through an exercise of what could happen, etc., etc. So yeah, this was it.
Yeah, this chart is basically your interest rate hikes, okay? Whether or not interest rates are going up or going down. So I'm gonna say interest rates, right? And at the bottom here, this is SPY. Okay, so and I've sort of lined it up so that they match in terms of duration. Okay, so if this is 2015 lining up with 2015 on SPY. Okay, so it's the same sort of duration. Now he actually drew in some really good parallels as to how SPY, like we'll look at one of the indexes now. I've just picked SPY for this example. How did the market react every time there was either an interest rate hike, or there was an interest rate let's say, drop? So, Sean, I really liked your notes. I really enjoyed your notes on this. And perhaps, I mean, I had some cursory observations, but maybe you could perhaps elaborate on, well, on certain sort of key points. Now, I only saw information dating back to December 2014. So that was one of the first ones that you had, one of the first data points that you had on your chart. December 2014, this is when the Fed managed to stop buying bonds by the end of 2014, but wasn't selling. Okay, but there was no QT, so they were not really effectively taking out any liquidity from the market, because you need to understand what is the current situation right now. There's rate hikes, plus there's QT. Okay, so now over here, it was just rate hikes, right? So they increased rates and they sort of kept it there, maybe slowly, gradually increasing it. Now, what did the markets do right here? Who was the Fed chairman back then? Do you remember?
Yellen.
2014? Yellen.
Yellen. So after
Okay.
Bernanke, it was Yellen. So Yellen and Jay Powell both served under Bernanke, who was chairman after Alan Greenspan. And Yellen and Jay Powell, people don't know this, but Yellen and Jay Powell were always pushing back against Bernanke being too easy with his money printing. So Jay Powell was always actually inherently hawkish under Bernanke at the very least, and you can see him how you can see the inner hawk in him show up again over the past 1 year. So
All right, so now how did the markets really react to that, right? When, well, they started, they basically came out saying that they're going to stop buying bonds. How did the markets react? You can see that the markets sort of flail there for a second, because we went through like a pretty immense, like a pretty long consolidation here, right? This is the monthly time frame, by the way, guys. So this, each candle is 1 month on that, right? So I believe this should have been at least a year. If not, yeah, about a year, because this is December 2014 to December 2015. We actually consolidated for a year. However, the move was never like aggressive enough. Now, that could have been because of the lack of QT. While they were technically increasing interest rates or actually keeping it stable, all we know is that interest rates were not going down. Okay, they had paused that bond buying program. We know interest rates were not going down, but they were not taking out liquidity, and that's why I feel like that move was a bit more shallow. Would not call that a full-fledged bear market, right? Now, in December 2015, Yellen begins to increase rates to 25 basis points. Goal was to raise rates all the way to 1.75% by 2016 end of year, but only got to 0.75. Okay. So what happened there when she did end up increasing rates? So all that happened here, technically, Sean, was they only stopped. They only stopped buying bonds. So you're telling me they were the only freaking buyers of those damn bonds?
So you see that
Um,
entire period, by the way, that's when she was using Fed speak, right? She was telling the markets that, hey, I'm going to be increasing all the way up to 1.75%, right? But you can
Ah,
see that what the Fed does and what they actually achieve are two entirely different things. She only
mm,
was able to get up to 0.75. That's 100 basis points less than the goal. And again, you think about convexity, right? From the difference between 0.75 and 1.75 in percent terms is huge.
yeah,
So
yeah. So she did end up increasing it by, well, 25 basis points only. The markets did get spooked out, because if you just, I'm just going to draw like a little line here, that way you see what the market did, right? So you can see that they got a bit spooked out here. But then what happened after was that there was a slow gradual, so basically interest rates sort of tapered off, right?
yeah.
And you can see that during that time, guys, markets were inching up. SPY was inching up. inching up. And at this point, interest rates, guys, was going up. What was the market doing? This too. SPY was, well, moving to the upside. So this should really give us pause and really, well, falling for the whole thing that, okay, every time interest rates go up, markets crash. Because it's clearly possible in an environment where interest rates go up, markets can also rally. I think the most important element here is liquidity. All we know is that, yes, interest rates were going up, but they were not taking out liquidity from the market. Okay, liquidity was intact. All that easing that they did prior during this era right here, that was not taken out of the market. That was still very much in the system. All they did was just increase interest rates, and markets still rallied. Okay.
Yep.
However, when we go into this region right here, now this is when J-Pow came into power. J-Pow tries to reverse QE. So this right here was QT. He was taking out liquidity from the market. Tighten and sell bonds on autopilot. What did the markets do here? Well, let's go ahead and look at that. Consolidated, we saw a bit of a move to the downside. Yeah, we saw a rally only for us to make like a double top of sorts and then move to the downside once again. This is when they were effectively taking out liquidity from the market. So now this was, Jan 2019. This is actually lined up with the, let's say, Bitcoin's bottom, 3K bottom. Yeah, that was the reversal juncture of the market.
When because the market was like, yo, you gotta stop this. We can't take this anymore. And he was supposed to keep this on autopilot to reverse all of what Bernanke did, right? And he wasn't able to.
Yeah, so this pivot, by the way, over here, so this is when he started tightening, just to give you guys another visual. He was tightening here. He was effectively taking out liquidity from the market. Then Jan 2019, this is the most crucial data point, because in that meeting, that one FOMC meeting, he came out saying that he's going to stop. So no more interest rate hikes and no more QT. So he stopped both programs right there in one meeting. Okay, what did the markets do on that? Well, we rallied to the upside, then leading into, well, the COVID crisis right here, where we saw this massive dump, right? And then we all know what happened right after that. We had unlimited QE, and there was some very, very aggressive monetary policy that took place that then led to this next run. So I brought this up primarily to drive in the point of, don't fall victim so easily to, okay, hike in interest rates means dump for the markets. No, we have several. Now, this is just one data point that I'm showing you on the charts, but Sean, I believe you actually had more data points with a very, very similar sort of picture wherein we actually saw an environment where interest rates were going up and markets were rallying. Okay, so that's why if I go back into this picture right here, if there's one thing I feel like people should be keeping their, listening out for, it should be that liquidity. Any sort of, at least that's what I personally am going to be watching out for. Right? If he alludes to liquidity going up in the system, I think that's what's really going to add the bullish tilt.
It's funny when if you scroll back down to the chart with the notes, I'd put a note down there. This was back in September, I believe, September 2021, where we were like, is this going to be Jay Powell's second attempt to be hawkish, or is he going to have to pivot again soon? And hey, I think this time he was kind of successful, right? He was able to do so because he did it fast. The markets the markets broke eventually. Well, the banks are breaking at the very least. But look at that. He was able to go past the pivot point this time. So
good
for you, Jay. Good for you.
He might just have a bit more juice left in him.
Because the guys at the time when we had drawn this out, right? Where that note is, where I'd written down J Powell's second attempt, rates were still at 0.06.
Yeah.
It's nuts.
So now that we know that liquidity is entering the market, and I think that's a pretty bullish signs for market in general. Now, if I actually go by the number that, 50% of the liquidity that was taken out from the market has now re-entered the market, I want to see if, 50% of the move has been priced into these charts, because technically, if say Bitcoin dumped from 60%, from $60,000 down to, 15.8K, I want to see at least 50% of that move sort of undone with the liquidity that is poured in, just to have fun with the numbers here and to see if things have been priced in according to the liquidity that has been, taken out and now re-entered. Let's see what the charts are doing.
At it. I really like that.
So let's get into the charts with that in mind. Okay, so now this is my daily time frame. Okay, yeah, so let's take it from the high. The high came in around 68.1k all the way to the low. And where is Bitcoin at this? So the midpoint comes in at around 32.2k. Are we at 32.2k? No, almost. So 32.2k is, yeah, it's that number. Now we know that Bitcoin has been an outlier throughout this entire, well, past 2 weeks, right? Because technically Bitcoin's been one of the few sort of risk-on assets to have run. Unless, Sean, do you know if NASDAQ, the other indices have run? I know SPY has not done much.
Nasdaq is running.
Okay, let's get on over to know. Yeah, there we go.
There you go.
Right? Has NASDAQ, well, done 50% of that? Almost, damn. NASDAQ too. Almost there.
Liquidity, man. Liquidity is everything.
Right, so almost there. Let's actually change the color of that. Okay, so we know that NASDAQ is almost there. How far is it? Another 2.44%. Very meager compared to crypto. Man, crypto's really spoiled us, eh? How about SPY? Let's get on over to SPY. What's SPY done? I feel like SPY's had one of the most lackluster moves, especially with the announcement of the liquidity, but let's go ahead and check that out. Actually, no, it's already at the 50% mark too. Go figure. Right, so we've already sort of, well, recouped much of what we had lost during this entire move to the downside across the board. So we have this. Now, ultimately, guys, now Sean and I, we always say this, that if you have to let anything guide your decisions in terms of your investment decisions, in terms of your trade decisions, focus on the TA, focus on price action. That is ultimately what's going to keep you on the right side. Okay, you're able to quantify a lot of things on your chart that you would not otherwise be able to do by looking at the fundamentals. The problem with the fundamentals, and this is something that I had spoken about yesterday, is that you twist one knob here, you turn one knob there, and that's going to have like a ripple effect throughout this entire very, very complex plumbing of our great financial system. And it could have several externalities, and you could not possibly account for everything. There's a lot of gray area. Okay, and all that's going to drive is a whole lot of frustration for you. So if there's anything that you can, always focus on the things that you can quantify to a decent probability, right? And for now, that's always going to be TA for us here at Mango. Now, if I'm focusing on the TA, Sean, I'm going to give them my thoughts on this. I am freaking bullish as hell. 4 out of 4 bull run triggers have gone off. What are you saying? Are you bullish right here, Sean?
No, I'm not. I'm long-term bullish, but we're sitting in monthly resistance over here, so it's hard to be like super excited and eager the way I was like a few weeks ago, right? Like 3, 4 weeks ago, I was really, really eager. That was the time Bitcoin was still sitting around 19,000, 20,000, 21,000. But now, monthly resistance, I'm going to have to wait for the monthly to play out, right? When we came back to test the monthly 10 SMA right over there, the white line that you're showing, Kusha, that was an opportunity, a massive opportunity for people who did not get in when we got in at the lower regions at around 17,000, 18,000. That's when we started talking about a cascading play, right? We've been putting together this trade for months since November, December, Jan. We had so much time to be excited. Now's not the time. I'm keen on being exciting. I'm trying to temper my emotions to not buy into resistance, right? There are other opportunities that I'm looking at on all coins that haven't moved yet. Those are where the opportunities lie, in my opinion, at the moment. Bitcoin, we already have a position. I don't want to get excited because you end up adding to your position at the wrong times, right? So, hey, I'm not saying it's not going to go up, okay? All the bull triggers, like you said, have triggered, but as a trader, I'm trying to not get ahead of myself at this juncture until we close above 30,000 on the monthly. I'm just rounding up over here. But yeah, 30,000 above the monthly would be a psychological level too for the market, right? And we have 8 days to go for that, a week to go. So yeah.
30,000. Oh man. Okay. So yeah, that 21 EMA is gonna be is gonna prove to be a very important sort of well, juncture. Now the thing is that I had actually, and I'm looking at the 21 EMA too, mind you, and I was sort of I was wanted to have fun with this, you know me and NTA, right? I'm like, okay, every time Bitcoin has gotten up to the 21 EMA, you know, what's the chances? Like, how often has it broken it in one fell swoop? like in the first sort of attempt at the 21. Like, how has it sort of performed?
It's frustrating. Closes right at it, and then the next month it continues over, way over.
Yes. That's what I've noticed. Like, even here, right? Like, we closed right at it. Okay, I'm just gonna zoom in. Closed right at it. Actually, no, we actually closed above. We managed to actually take it out on that sort of monthly close. But you can see that other instances where we've technically closed at the 21, and it's just about giving it to you, but not really, only for the next month to actually rally to the upside. So I'm sort of wondering if we get a very similar setup here too now. However, that being said, I'm always going to tell you guys the same thing. Always err to the side of caution, right? You could get a better bid. Always try and position for that better bid, because when you're able to catch your bids at certain levels, good levels, you are going to be, well, you're going to be able to manage those trades extremely well, okay? And it's also about really protecting your mental equity, and when mental and emotional equity as traders and investors, because when you get in good positions, you're not worried about your position then, right? You're just there to ride that trend to the upside. Then you can start focusing on other assets that you want to get into, other altcoins that you want to get into. You have a fresh mind for that.
Yeah.
You're not worried about your positions that are sitting in the red right now. So that's why I'm always going to implore you guys, we're still in the nascency of the bull market. You can still get some really good bids at some very good levels. All right, if you have to get greedy on them, because you're always better off saving your emotional and mental equity. Ultimately, it's going to set you up for every other trade to come. So now I'm going to basically give them a quick sort of walkthrough. Now, yesterday I had to run to the gym, so I could not really give you a quick walkthrough of all the bull run triggers that have gone off. So I'm just going to go over a very quick sort of let's say summary of it. So now this is actually one of the bull run triggers that I had, which was let the monthly, basically I was looking for the monthly to close 2 monthly closes over the 10 simple moving average, and we have that right here, right? We got the first close on the month of Jan, second close on the month of Feb. The 10 SMA is that white line right there, right? So in 2 beautiful closes, that was your tell. And we have been talking about that. That's why we even turned bullish right there. Now, how about the oscillators? We were looking at the monthly oscillators, once again, still crossed bullish. All right, there's no point in getting stubborn on these things. We have a system so that we may stay on the right side of the overarching trend. Once again, Stokes, guys, on the monthly, still very much in bullish territory. I mean, after this move, something very drastic has to happen in order for this to cross bearish again. But this is the monthly chart right here. How about the weekly? Now, on the weekly, we were looking at 2 things. Weekly, we were looking at dynamic. And I want you to notice that even after that whole SVB bank failure, as well as the USDC peg, we came down to, well, graze, in fact, that 19.5K region, but only to get a swift pickup on that, once again closing over the dynamic. What was the trigger on here? 2 consecutive weekly closes over the Mango dynamic indicator, which we got, and we have been consolidating over ever since. Alrighty, now there was another one hinged on the weekly, which was once again the dynamic, but the Ichimoku setup. Now this is the most recent trigger that has gone off. The most recent and the last trigger to have gone off, okay? Now this, guys, is our investor trigger. I had brought this up to your attention as the investor trigger. Essentially, for those of you who do not want any trade management, in fact, you're not even here to trade. All you want to do is catch the meat of the freaking move, and you just want to know when to get in and out. Well, what was the trigger on here? We wanted to see 1 weekly candle close over both levels, okay? Wow. The Ichimoku dynamic and the 55 simple moving average, and look at the conviction on that close. That is a very, very strong candle right there, right? This has triggered. It is official. It's done. We have 1 tick on this.
I do want to emphasize, since you mentioned investor trigger, that if you're looking to invest in Bitcoin for the long term, right? These prices aren't bad at all. These are really good prices. In my opinion, anything underneath 30K is going to be looked at as a massive opportunity long term. So don't get me wrong when I said I'm not bullish at this juncture. I'm bullish long term. I'm talking about the lower, shorter time to mid time frame trades for your leverage trades. I wouldn't be putting on too much risk on Bitcoin over here. I've posted some really, really good opportunities in the C chat. So if you guys are on the C program and you guys are following along with the daily videos, use your tools provided to you in the C program, your Mango risk management indicator, your tool sheet provided to you, etc., to manage those altcoin positions, because there's massive opportunity over there, in my opinion, in the lower to mid time frames. But for Bitcoin, I think you are putting on a, like, the lower time frames are looking good at the moment, but I'd wait for the monthly to close if you're looking for leverage trades over there. However, if you're a longer term investor, like Krisha mentioned, all the longer term triggers have gone off.
Yeah, exactly. And also, so for those of you in the seed program, there's a separate sheet for you guys in terms of triggers and key targets. And I suggest going ahead and checking that sheet out. I have updated it, and I will be also adding on the opposite side for, well, basically the reversal signatures from when we turn into from a bull market to a bear market. Okay, that way you are prepared for that side as well. Now, also one more housekeeping thing. It's a good thing that you brought this up, Sean. One more housekeeping thing. Today is, well, the second last day of the discount on, well, the seed program and the dynamic. So yeah, take advantage of it for as long as it's there, okay? The code is going, I'm going to try and put the code on the screen, and I'll also add it in the description below. You can just copy paste it, well, for ease. Cool beans. Now, so yeah, this is one of the triggers that have gone off, and I agree with you, Sean. Like, even I would not technically be buying up against resistance. As far as leverage trades are concerned, I'm saying be a bit more cautious here. But as far
There's
as
too much. There's
investors,
too
yeah,
much over here that will go against you very quickly. Monthly resistance will come and smack down against your low time frame trades at any moment. On top of that, you have a big event coming in, right? So it's I'm just not comfortable with lower time frame trades over here on Bitcoin, but there's some really juicy altcoin trades, and I think this is a mistake people make all the time. They're always chasing price as opposed to using a systematic way of trading. Like, if the altcoins are looking good based on your system, you trade that. Like, if Bitcoin is looking good based on your system over here, then by all means trade it. But I don't see how, unless you're trading the really lower time frames, I just don't see it.
yeah.
I've
Sorry, go
literally
on.
captured like 100% to 200% trades on multiple altcoins over the past week.
Yeah,
Like, and while everyone else is chasing Bitcoin at the wrong time, when people are supposed to be looking at Bitcoin for the big positions and the big trade, they weren't. They were ignoring it. And now, over the past few days, people are staring at Bitcoin at the wrong time, in my opinion.
and guys, Sean has been in the freaking zone. Like, he's been freaking killing it with his altcoin trades, especially. So, for those of you in the seed program, make sure you're, well, listening up to those who are in the zone. I've mentioned this before, and right now, if there's anyone I have identified to be in the freaking zone, is Sean. I copied you on some of your trades, Sean. Been doing pretty well. Been doing pretty
Ted is in
well.
the zone too, guys. Follow
Yeah,
Ted.
yeah,
Ted
Ted
Sheets has
Sheets. Oh
been
man,
killing it.
he's like really, like, engrossed in the charts. Like, this guy's always looking for opportunity. It's nuts. So yeah, for those of you also looking for a good community to join, come on out. The Discord chat is open for now. As soon as we will get into, well, the middle of the bull market, we might actually be closing out the Discord chat. Okay, so now is the time to join the Mango fam. So yeah, getting back into the bull run triggers. This is the last investor trigger to have gone off. Okay, now I've been waiting for this. It does not catch you the meat of, as in it does not get you into the bottoms or the tops, but it will always get you the meat of the freaking move. Okay, that's what the investor trigger is here for. That's why we even had the filter of the 55 simple moving average on it. Okay, that way it always kept us on the safe side of that trigger. Now, in addition to this one, the first one to have gone off was, of course, the 4-day dynamic. Right? And just look at this, man. Jesus, it was so freaking beautiful. We took it out, rallied to the upside. Okay. This is it right here. Okay, 32% just on the freaking dynamic call. And then, yeah, we broke this down here during the USDC DPEG, right? As well as the SVB bank failure. One led to the other. However, notice no confirmation. Right? Price took it back up in the very next candle, and that was a bloody engulfing candle right there.
Do you
Right?
remember
When you
that
see,
that day, Krisha, where we did a video and everyone was like watching the green candle that came after, and they were like, "Hey, is this a bull trap? Is this a bull trap?" And the two of us were like, "No, people should be asking, is that a bear trap?" And yes, that was a
yes.
freaking bear trap. Right now, in hindsight, it's very clear that's a bear trap. But at the time, people's biases were so skewed towards the downside that they were asking the wrong question.
Yeah.
But you should have been asking, was that a bear trap? And that was a more important question to ask, because if the bears were trapped, you're going to see a continuation, because they've got to close out their flicking shorts now at higher prices, causing buy pressure. That's exactly what we saw. Everyone was asking, is this a bull trap? No, 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 no. You got to be asking the question as a trader, to a trader's mindset. Was that a bear trap? Because if it's a bear trap, there's opportunity. You can't predict whether something's going to be a bull trap or not unless you have a plan for a bull trap, right? We talked about that in a different module. But when you identified traders trapped on the wrong side, and you could have identified that, right? Because look at that, the 4-day dynamic was your tell, price closed
Yeah.
underneath, and then immediately reversed to the other side. Traders are trapped. That was a bear trap, guys.
Yeah. Yeah. So yeah, this was some very, very powerful price action from Bitcoin, and that's another thing why I always tell you guys, wait on that confirmation, always, and always sort of account for the kind of volatility, especially if you're leverage trading. Always trying to account for the sort of volatility that you see on these charts. That way, you're on the safe side. You're not getting liquidated in the nascency of the bloody bull run. Right, you don't want that. So yeah, this is the 4-day time frame. Now you can see, now we just went over all triggers, guys. 4 out of 4 bull run triggers have gone off. Okay, and I have 4. I basically presented 4 to you. That way, if this one went off, when this one closed under, people were feeling a bit stressed. But what happened here? Right? What happened here is only 1 went off. We still had 2 more that were on. Right? For as long as that 2 were on, you could take solace in the fact that, okay, there's still quite a bit intact on the technical view. So you basically, it's majority wins, guys. Okay, majority freaking wins. 2 is greater than 1. All right, 50% of the triggers were still on even after the dump. All right, that's why I'm always going to tell you guys, assess your entire technical picture. Don't just focus on one thing. Alrighty, so now this is the macro picture on Bitcoin. I'm just going to take you guys very quickly to the 4-hour time frame. I did get a couple of questions regarding the the ascending symmetrical triangle that I had basically introduced to you guys yesterday. Do I have it? Which chart do I have it on? Did I get rid of all of my lines again, Krisha? Jesus Christ. But anywho, I'll just draw it for you once again. Okay, yesterday we spotted a symmetrical triangle, and I told you guys that, hey guys, make sure that you are paying attention to the psychology of these candles, because it's going to give you a bit more insight into the price action, what to really expect. Now we can see so right here, what happened here was that we actually got a bit of a fake out right here, right? So the bulls actually closed, the bears actually closed underneath 27.6K. And by the way, 27.6K I had presented to you as a target that I basically derived from momentum, price action, volatility on the weekly time frame. Now, just to drive in the significance of that level, which I only caught today, by the way, was this monthly ribbon. 27.6K also lines up with the 21 EMA on the monthly time frame. Strength up against 27.6K is going to be the tell, right? We want to start seeing those daily, the consecutive daily closes, strength along that region. How did the daily close along that region once again? Fix the scale. We've been living over it, okay? In fact, we actually took out a bit of a high right there. Plot it right here. So we have a higher candle body close on that daily, right? So this is actually a very, very good, strong technical picture on that monthly 21 EMA level, also 27.6K. Alrighty, so this is looking good. As far as that 4-hour symmetrical triangle is concerned, this is now morphed into an ascending triangle. That range has now sort of, widened in a way. Right, so now we're dealing with an ascending triangle right here. Now, depending on where we break out, once again, though, I will be looking for, I want to see those dailies close over 27.6K. A more sort of strength along this region will give us the tell. Now, and this is something that I want to mention, when price breaks down, especially when we already have a very aggressive trend on Bitcoin, now we've moved a good 40% to the upside. When the breakdown comes, especially on these symmetrical triangles, ascending triangles, right? It's basically something against that overarching trend. I want to see a volume push here. Right, I want to see a volume bar that is unique from everything else that came before, that stands out. Right, so I want to see a bit of a volume push there for me to anticipate that, okay, this is a legitimate break. I'll be looking for further downside from Bitcoin. But for now, this has sort of morphed into an ascending triangle. Right, I have already given you targets to the upside. If I take the move, the target doesn't really change much from yesterday. But this will essentially take Bitcoin all the way up to 29.6K if we do end up breaking up. Right, at which point I think we actually complete the C-span trade on the weekly time frame. So we likely get up to 31, 32K. That's going to be the most immediate target that I gun for personally. Alrighty, but this is the current technical picture on the lower time frames. Sean, is there anything else that you're seeing on Bitcoin's chart?
Nope. I think you covered it all. Very
Cool.
comprehensive.
Cool beans. Yeah, so this is all I have for you for today, guys. Now, if you have anything else that you're catching on Bitcoin, if there's anything else that you want to say on in terms of the macro view in the markets, well, chime in either the comment section or hell, one better, get into the Discord chat and make new friends there who are also interested in the same things as you are. And with this, I will see you in the next update. Trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.
Ciao.